Good evening. It has been a difficult start to the year for Indian investors. And in fact, over the last 12 months, the Indian markets have fallen by almost 20%. There are a host of global and local factors to which one can point to as to why this has happened. On the global front, growth has been weak. There have been concerns about the currency policy of China and about interest rate policy in the United States of America. At home, the reality is that earnings growth has not met expectations. Earnings growth for the current year looks like it will eventually finish in the low single digits compared to double-digit expectations last year. There are concerns about the large increase in non-performing assets within the banking system, and this is having an impact on the economy because these banks constitute more than two-thirds of the Indian banking system. Profits are depressed for a variety of reasons. Growth exists, but it is not as strong as one might have hoped for. And in addition to that, a lot of industries are operating at less than full capacity utilization. There is a significant interest overload on the Indian corporate sector due to high levels of debt and also due to the high cost of debt. Our macroeconomic fundamentals are quite strong. The currency has been remarkably stable over the last 2.5 years, a period during which most other emerging markets have seen a 20 to 50% collapse in their foreign exchange rates. I think the RBI governor's perspective is very appropriate at this point of time, and he describes India as being in the early stages of recovery. It is no doubt an uneven recovery, and there are perhaps some areas of weakness. But growth certainly does exist. We are still growing at a fairly reasonable compared to other parts of the world. We are at this point of time far more constructive towards Indian equities because valuations are now pretty much in line with historical averages. So we think this is a time for Indian investors to be more constructive towards equity. Keep in mind a 3 to 5 year perspective, preferably use a systematic investment plan, but not to lose confidence in our intrinsic growth prospects and to stay invested for this journey.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.